Good morning, everyone. So NAT finally reported their Q3 results, and I'm going to go over all their financials and what I think about their Q3 results. Okay, and my name's Adam from Synopsy Stocks. Here we talk about everything finance, and one of the companies I own is Nordic American Tankers, and they today in the morning they released their Q3 results. Okay, so as we can see here, NAT based on these results now is down by about 2%, and I mean. The reason why this is because I personally am not very impressed by their Q3 results. And I mean, as compared to other shipping companies, it's more or less in line with other Q3 results. Okay, so let's go over it. So first off, right off the bat, they lost $10 million in the third quarter as compared to a profit of $49 million in the second quarter of 2020. Okay, and the main reason for this, in summary, of course, we're going to go more in depth into it, is one, because of lower spot rates, which of course is expected, and two, because a number of their ships went through the dry docking process, which pretty much takes them off of the market in order to do maintenance and repairs on the ships. Okay, they also increased the number of shares by about 1.5 million. We'll go over that as well, and the pretty much the net loss per share was 7 cents this quarter as compared to net profit of 33 cents in the second quarter. Okay, and if we're comparing it to their second quarter results right here, we can see nicely. They also declared a dividend of 4 cents, by the way, right? So we can see here that this chart represents fourth quarter of 2019. They earned $12.7 million in net profit versus second quarter of 2020. They earned $49.1 million of net profit. And if we compare it to the third quarter of 2020, we could see that it would be somewhere around here at negative $10 million. Okay, so drastic decline in net income. Okay, and here we see that in the second quarter of 2020 they had 20 cents a share of dividend, but now it's 4 cents a share, which we will see. Okay, so that's pretty much the summary of it all, and let's see what they have to say. Okay, first off, they say NAT report for the third quarter as a whole is expected to be very good. 2020 as a whole is expected to be very good for NAT. Okay, I mean, I'm not so sure. Like, sure, 2020 as a whole, they'll come out with a net profit, but the fourth quarter, in my view, is not going to be very nice to NAT. Okay, um, just because, of course, of increased lockdowns and still very depressed spot rates. Okay, as we saw in my previous video, we saw that like the spot rates for Suezmax vessels was like 5,000 for the week. Okay, and I can link it somewhere up here. Anyways, the average TCE for our trading fleet during the third quarter was 25,000 per day per ship. And of course, this compares to second quarter where their average TCE was 48,400 a day per ship. Okay, so drastically lower, about half of spot rates for this quarter. So in perspective, this is the best third quarter TCE results for many years, which is honestly kind of sad. And saying that they had even a net loss in one of their best TCE rates for the quarter is honestly a bit surprising. As 2020 draws to a close, we see far less certainty in the marketplace. Asia is recovering strongly, the US election season is over, and a vaccine may be widely available by early 2021. Okay, they're talking about the Pfizer vaccine that showed over 90% efficacy against the virus. The global pandemic short-term impacted the strong fundamentals we saw for the tanker market going into 2020. Of course it did. Despite a temporary slowdown, we see that 2020 as a whole will be a very good year for NAT. And of course, they're just referring to the first quarter and second quarter results being really, really good for NAT, and then the third quarter and fourth quarter not being so great. We believe that these positive fundamentals will continue. Cash dividends are a priority for NAT and reflect our earnings. In 2020, we have paid 60 million or 41 cents per share in dividends. With this report, we announce our 93rd consecutive quarterly dividend. So they're very keen on keeping or continuing their dividends because that's what attracts a lot of the shareholders. And they announced dividend for third quarter is 4 cents per share, payable on December 15th. But as long as you're a shareholder on December 2nd, you'll get that dividend. Okay. So again, 4 cents per share is not a lot, of course, as compared to like 20 cents per share in their previous quarter. but still it's something, and they're still paying out a dividend. And I mean, it could be argued that they shouldn't be focusing on paying out a dividend; they should be focusing on decreasing their debt. But as an oil tanker company, you generally need to pay out a dividend, right? Because that's what the whole industry is doing. Okay. During the third quarter, we took several of our vessels through dry dockings, and as such, our net voyage revenue and net profit were affected, right? Again, dry docking is just maintenance and repairs on the vessels. This was an optimal timing, of course, because the spot rates are so low. Our net income for Q3 thus came in at negative 10 million, which gave us an earnings per share of negative 7 cents per share. And they're saying that their year-to-date net income was positive with close to 80 million, which is equivalent to an earnings per share of 53 cents. We'll see, because they'll probably swing a loss in Q4, so we'll see what their total net income for the year is. This was an improvement of about 100 million compared to the same period in 2019, which produced a net income of negative 23 million. Okay, so again, they're still doing better than in 2019, which again is promising. However, they're most likely, of course, we saw they posted a loss in Q3, and most likely they will post a loss in Q4, right? And we'll just go through these bullet points, and then I'll give my take on it. Our EBITDA for a non-GAAP measure was positive by 15.6 million, which was lower than second quarter, so I'm not going to go through that. Our total long-term liabilities as per September 30, 2020 stood at 313 million, a reduction of more than 63 million since year-end 2019. And their net debt is about 11 million per ship. Okay, they also announced on September 23, we announced 2 new building contracts placed with Samsung Heavy Industries. The 2 Suezmaxes will be delivered first half of 2022. Financing has been secured. This is part of our strategy to renew and grow our fleet. The quality of the NAT fleet is first rate, reflecting the vetting record of our ships. Okay, and I already went through the reports. We're just going to go over our fleet. So what do I think of the results? Of course, not the best. And as we see here, the price is definitely being affected. Let's see if it's even lower, but it's around negative 1 or 2%. And the reason why it's not lower, in my opinion, is because if we're looking at the 6-month trend, it has already been decreased by like 35%. So it already priced in that Q3 and most likely Q4 is going to not be the best, right? So I don't see much more downward movement. Maybe it'll stabilize at around $2.90, and then it'll only go up from there, or it'll be around the $3 range. That's just my personal opinion for Q4. Of course, I'm going to be holding all of my shares, just because, like them, which we'll read in this section, I do believe in the long-term market for oil tankers. I mean, long-term as in like anywhere from like a year or 2 to 5 years to 10 years. I still believe that oil tankers will be around, as they'll gradually get less and less demand because of environmental concerns. But anyways, I mean, again, not a great report, but I do think that, looking ahead into the future, past this quarter and past fourth quarter, they'll be doing okay. Okay, and so let's read here. So again, we know that 2 new vessels will be delivered for the first half of 2022, and the ships are fully financed, and it's part of their strategy to renew and grow their fleet. And so the fleet now consists of 25, including those 2 new buildings that will be delivered in 2022. And they focus on the Suezmax market only, and they believe that Suezmax vessels are more versatile, and the 1 million barrel market offers more options in trading than the VLCCs, which have 2 million barrels of lifting capacity. Okay. And so here they say we take extra care to maintain our vessels to the highest standards for safety of crew, cargo, etc. And so we recently took one of our oldest units through a regular vetting inspection with 0 observations, right? So of course they need to vet a lot of their ships because they're getting very old and even close to scrapping age. So of course they have to take these precautions to make sure that their ships are what they say is like first rate. So of course they say that the future may be uncertain due to the virus, the pandemic. However, the vaccine and strong recovery in Asia looks for a good recovery beyond the short-term sort of struggle with the spot rates. Okay, that's what they say in this paragraph. Yeah, so I mean, what they say here is that they are very optimistic about the future. And I want to read something where they say about the world economy and the tanker market, this section here. what is good for the world economy and the world trade is positive for the crude oil tanker business. So our long-term positive view on the tanker market remains the same, but the global pandemic has, in our point of view, delayed it by months and not years. A low oil price is good for the world economy and works as a stimulus for recovery. So they see encouraging signals of improved Asian economies, boding well for the world economy and the tanker markets going forward. So, of course, Asia got hit with the pandemic first, and now that they're recovering nicely, they see that the rest of the world will follow suit soon. Okay. What they say here is best represented by a picture, which is pretty much right here. And what they're saying is pretty much that the order book for tankers is at a 24-year low, right, as percent of the fleet, right? So the order book as percent of fleet is represented by this blue line, and it's just under 8% here, which is the lowest in 24 years, okay? However, the average fleet age is also steadily rising, right, which is represented by this shaded in gray area, right? We can see the average age is 10.5 years. And what this means basically is that as ships continue to be scrapped and as less and less ships are going to be on the market, this bodes well for the spot rates because tanker tonnage is inelastic in the short term, right? And they work pretty much exactly on theories of supply and demand. So when there's less of demand of the ships, they can charge more for the spot rates and to transport their oil, right? So that's pretty much what what this paragraph is saying here. Okay. So, and one last thing that I find kind of funny is like it is vital to ensure that there is no conflict of interest among shareholders, management, affiliates, and related parties. Interests must be aligned. From time to time, the shipping industry, we see that questionable transactions take place, which are not in harmony with sound corporate governance principles, both as to transparency and related party aspects. We have zero tolerance for corruption, and that is underlined. Okay, zero tolerance for corruption. However, talk about corporate governance. We saw in a recent video that I just posted about NAT that they do have some shady financial practices where they announce when they buy shares but not when they sell shares, right? Which to me is pretty poor corporate governance. I call them out on it. I actually emailed the CEO, so again, we'll have to see what he says to my email. He probably won't reply, but I mean, I just think that this is kind of funny, is that they say that they have zero tolerance for corruption, yet they always announce when they're buying shares but not when they're selling shares. Okay, so I just think that's kind of funny. And let's compare it to other companies in the tanker industry, right? And one of them is DHT. They just announced on November 9th their quarterly results, and their quarterly results were like not bad, I would say. So they're paying out a dividend of 20 cents per share, pretty damn good. And they had net income of close to $51 million, which equates to pretty much 31 cents a share, right? So that's pretty good, and they have solely VLCC carriers, which averaged $48,100 per day, okay? And I mean, they probably didn't have to take many of their ships to the dry docks to get repaired and maintained. However, this is just showing that, some companies did produce positive quarterly results, right? Like DHT. And if we're looking at the Teekay tankers, they also produced a loss in the third quarter. Okay, so they actually had a loss per share of $1.32. So again, quite worse than NAT. But so it just shows that they also claim that weaker spot rates and a large number of their ships going to the dry docks made them have such a huge net loss of $1.32 per share, right? And they lost $44 million as compared to NAT, which lost $10 million. And they operate in the Suezmax, Aframax, and LR2 industry, if I remember correctly. Okay, so all across the board, tankers, some did well, some not so well. Maybe Q3 is the time where a lot of these ships undergo dry docking schedules. So it's just all across the board kind of. Q4 I don't think will be as good. I think we'll have worse results coming out. And if we're talking about, again, let's just see what the price is. I don't think we'll see much of a movement in the stock price from here to Q4. I don't see it going up much. I don't see it going down much. However, if you are a shareholder, at least we'll still be receiving a dividend of 4 cents per share. And again, I'm going to be holding my shares, and I'll continue doing periodic updates on NAT. But yeah, anyways, we finally received, and I'd love to know what you guys think about it. But yeah, if you did enjoy this video, please be sure to give it a like and subscribe if you haven't already. And I'll see you next time, guys.